Every big invention starts as just an idea, but ideas alone don't build huge companies. So, who makes the future happen? Who dares to invest in things that don't even exist yet? Today, we're opening the world on venture capital, the main power source behind the biggest dreams. What do venture capitalists actually do, and how do they help entrepreneurs build the next huge thing that will change the world and make us all wonder how we ever lived without it? Get ready because we're going to explain it. This isn't just about money, it's about the whole system, the people, the dreams, and the energy that turns a simple idea into a billion-dollar company. So let's start with the big picture, what we call the venture creation ecosystem. It's like a carefully planned dance involving three main groups, each with a super important job. Number one, entrepreneurs. These are the heart of everything. They're the people who take risks, solve problems, and work non-stop. They boldly say, hey, I have an idea and I'm going to build it. They're not afraid to challenge old ways, work incredibly hard, and put all their effort into their vision. Think of Airbnb, which changed how people travel, Facebook, which connected billions, or even a local small business owner with a great new idea. Number two, venture capitalists or VCs. These are the financial experts who provide the money that helps entrepreneurs grow. They invest money into new companies that they believe have a huge chance to succeed, giving them the funds to build products, hire teams, and expand quickly. In return, VCs get ownership in the company called equity. If the startup becomes very successful, the VCs also benefit a lot. They are the smart investors willing to bet on future big ideas. And lastly, established firms. These are the giant companies already dominating their industries, like Google or Microsoft. They often work with startups, invest in them, or even buy them completely. Why? Because it's faster than building something new themselves. Buying new ideas is often easier than creating something from scratch. These big companies provide expertise, resources, and access to large markets, which helps a startup grow even faster. Now let's talk about what actually moves around in this ecosystem. It's a complex interaction between money and talented people. First, money. VC gives startups funding to create their products, hire employees, and grow quickly. This first investment is more than just cash. It's a lifeline, letting companies focus on their main goals without worrying about money. And it's not just the VCs. Big companies also invest in startups, like Intel Capital, which has supported many young companies. It's not just the money either. It's also access to markets, expert advice, and resources. It's like giving a startup a golden ticket to play in the big leagues. Then there's people's flow. Many skilled professionals leave big companies to start something on their own. Why? Because sometimes working for a large corporation can be a bit too organized or slow. They want independence, the chance to build something from scratch, and the freedom to follow their passions. Here's a cool example. Fairchild Semiconductor. Ever heard of it? Many people who left that company went on to start huge tech firms, including Intel. It's like it was a training ground for innovation, where smart and ambitious people thrived. And it's not just the tech people. Lawyers, consultants, accountants, all kinds of experts launch startups too. Here are more examples from different industries, showing how deep knowledge, a strong network, and a shared vision from a previous job can be the perfect starting point for a new startup. So, the PayPal Mafia. This is a very famous example. The original company was PayPal before it was bought by eBay. Individuals left and companies founded. So number one, Elon Musk, co-founder of X.com, which merged with PayPal, later founded Tesla, SpaceX, Neuralink, and the Boring Company. He's a very famous name, constantly pushing the limits of technology. Number two, Peter Thiel, co-founder, went on to co-found Palantir Technologies and Founders Fund, a major venture capital firm. He is known for his unique ideas and investing in unusual concepts. Number three, Reid Hoffman, Executive Vice President, co-founded LinkedIn. He's a well-known voice in the tech industry, sharing his thoughts on the future of work. Number four, Chad Hurley, Steve Chen, and Javed Karim, employees, co-founded YouTube. They completely changed how we watch videos, creating a platform that everyone uses. Another example is Goldman Sachs alumni, finance, original company, Goldman Sachs, and other big investment banks like Morgan Stanley and JP Morgan. individuals who left and companies founded. Many have gone on to start successful hedge funds. Example, Tiger Management run by Julian Robertson, whose former employees, Tiger Cubs, then started their own funds. Private equity firms or smaller investment banks. They bring serious knowledge and connections. Their finance expertise and vast networks give them an advantage. Number 3, SpaceX engineers, aerospace. Original company SpaceX. Individuals who left and companies founded. As SpaceX became more important in the space industry, many ambitious engineers and leaders left to start their own ventures. These people often use their experience, technical skills, and professional connections from SpaceX to work on new projects in areas like space tourism, satellite technology, and advanced rocket systems. So why are startups such a big deal anyway? Why should we care about this whole system? Well, they create jobs and new ideas. Two things every economy needs. They are the engines of growth, pushing the limits of what's possible and creating chances for countless people. Small businesses make up 99% of all companies in the US, and they provide about 67% of private sector jobs. They are the foundation of the American economy. Now, if we look closely at high-tech startups, they grow even faster and pay higher salaries. They're responsible for 37% of private sector employment. They attract the best talent and drive technological advancements. This can be seen in the National Bureau of Economic Research 2023 study on high growth firms. Startups may be small, but they have a huge impact. They disrupt existing industries and create completely new markets. So let's talk about the ultimate dream scenario, becoming a unicorn. No, not the mythical creature. In the startup world, a unicorn is a company valued at over $1 billion. It's the symbol of amazing success, new ideas, and being a leader in the market. Super cool, right? But also super rare. Only about 0.2% of startups ever reach that level. Most unicorns you've ever heard of are consumer facing, like Spotify, Uber, or Airbnb. They've completely captured public attention and become common names. So how do startups and their investors actually make their big money back? What's the final reward for all the hard work and risk? There are two main ways. Number one, IPOs, initial public offerings. This is when a startup goes public, selling shares of its companies on the stock market for the first time. It's a huge moment. They raise a lot of cash and the early investors finally get paid for their trust. It's proof that the original version was successful. Number two, acquisitions. This is when a bigger company buys the startup. Think of Facebook buying Instagram or Google buying Android. From 2014 to 2013, 145 startups were bought for over $1 billion, mostly in tech and healthcare. It's a way for established companies to buy new ideas and talented teams instead of building them themselves. So, continued importance in evolution of venture capital. So, VC's lasting role. As a startup world grows, venture capital remains a crucial source of money, expert advice, and guidance for entrepreneurs. The job of VCs keeps changing as they adapt to new technologies, changing markets, and new industries. So new ways in VC. New approaches in venture capital include smaller VC firms, micro VCs, angel investors, individuals who invest their own money, crowdfunding platforms, where many people contribute small amounts, and corporate venture capital arms, investment divisions of big companies. These new founding options give entrepreneurs more choices and flexibility in getting money for their business. So what role do VCs really play? What's their true contribution to the world? They don't just write checks, they provide the fuel for new ideas, take big risks, and help turn dreams into reality. Without them, many of the companies we use every day might have never existed. They're important, often unseen heroes of the startup world. That's it for today's video. If you learned something new, give it a thumbs up and subscribe for more detailed looks into the world of startups and innovation. Thanks for watching. I'll see you in the next one. Stay curious and keep innovating. And don't forget to like and subscribe. Thank you.